initial jobless claims jumping up to 240,000 is an important data point. Now, there's volatility in the week-to-week data, but if that were to stick, that's
What's
an
your
important
4-week
development.
moving average on claims where it's a whole new world after all?
I think if you are 240 to 250,
Really, that tight?
that
Wow.
is usually the numbers that you
Wow.
would begin to think about. I mean, initial jobless claims, when they move up in a sustainable way, typically stick there. Now, there's volatility in the week-to-week data. We had to jump a few weeks back up to 230,000. You have to look at what's going on in the state level data, so I don't want to, without seeing all the details, it's hard to know. But if that sticks, that's an important data point because the labor market has been strong because layoffs have been low.
Right.
If that changes, it changes the picture of the labor market. I'm not saying this morning's data point did that, but it certainly could be important if it sticks.
Well, the Sweeney offspring are employed, so we're doing our part here. What'd you take out of the Federal Reserve's chairman's comments yesterday, and just kind of the data we saw?
Yeah, so yesterday's morning CPI was a great data point from their perspective. It showed a softening, 16 basis points month on month. It was good in a lot of the areas that they would want it to be good. Services inflation was softer. Rent and OER was a little bit disappointing. I was surprised that they only showed one rate cut for this year.
Okay.
Now it is our baseline that they only cut rates once.
So you think that only once, and we do that in December? Okay.
In December. But I was still surprised that they signaled that yesterday. I thought that they would want to maintain more actively optionality to cut rates before the meeting. Now, Chair Powell downplayed the signal from that dot plot, as he typically does. But at the same time, I don't think he was as dovish as he could have been. He talked very strongly about the economy, about the labor market, about wage growth being high.
Come on. You're at UCLA with a wonderful faculty there and all the heritage of Alan Meltzer being there. And come on, no textbook. Obsfeld, Rogoff, all the rest of them has multiple further progress in it. What a bunch of malarkey. I mean, I'm sorry. There's like 3 adverbs back to back. Who invented multiple further progress?
Look, the reality is we had 4 stronger prints to start this year. We did get 1 much better print. But the Fed, looking at the economy, the labor market report that we got on Friday, Atlanta Fed GDP tracking above 3% in Q2, is looking at an economy that does not urgently need
So
rate
then why
cuts.
doesn't he come out like in the old days and say, we don't know, we're data dependent, the market's got to pop, the economy's got to pop, the stock market's got to pop, we're going to wait instead of all this mumbo jumbo.
So I think he did. The problem is that they have the dot plot now. And so if you just took the press conference in isolation, he essentially said that. We are data dependent. We're making decisions on a meeting by meeting basis. We have to see how the inflation and labor market data come in. We think the economy is strong right now, so we don't urgently need to cut rates. Now the issue is they have the dot plot. Greenspan did not have the dot plot, and so it's harder to get away from any calendar-based guidance.